How's it going, everyone? Today I wanted to talk about the one ETF to rule them all, VT. If you could only own one ETF for the rest of your life, which one would it be? A lot of popular picks are VXUS, Vanguard Total International, SCHD, Schwab Dividend US Equity ETF, VOO, Vanguard S&P 500 ETF, VTI, Vanguard Total US Stock Market, and QQQ, which is the NASDAQ 100 ETF. So if you could only pick one of them, which one would you pick for the rest of your life? So I'd like to introduce us all to VT, which is the Vanguard Total World Stock Index Fund ETF. It holds 9,700 stocks across 50 plus countries, which holds US and international stocks. It's market cap weighted, therefore the largest companies have the highest weighting. Smaller companies have smaller weightings, but all are represented if they're publicly traded. Very low expense ratio at 0.06%, which is very competitive as far as expense ratios go, and it tracks the FTSE Global All Cap Index. So the benefits of VT are global diversification, which is exposure to all stocks. You aren't just capturing the market cap of US or just international or just a subsector within each of those sectors, such as like US tech or US small cap, etc. You get a little bit of everything with VT. Current holdings are 60%-ish US by market cap and 40% international by market cap. That is constantly changing. This year, it is a little bit heavier on international due to international's outperformance this year. I would call it a one-stop shop ETF. You don't need to rebalance your holdings to match your desired market cap because it is globally diversified. So you don't need to tinker with, if you want to match the market cap, let's say you hold VTI and VXUS. You don't need to change your weighting on each of those manually because VT does it automatically. It carries simplicity. You can evade behavior pitfalls, such as tinkering with your portfolio. If there's a stock that you are really interested in, let's say an international stock, and you don't hold any international, you don't need to worry about that anymore because you own part of it by owning VT. And you don't get the fear of missing out. That's kind of what I was just talking about. You already own the next big thing. If there's, a country that is blowing up as far as financials go, and you happen to be missing out on it because you just are holding US, or if something happens in the US and you're just holding international, you might miss out on something and feel the need to go tinker with your portfolio. However, if you hold VT, that is not going to be a concern for you. So this is the current holdings for VT. So it's going to look a lot like a US large cap list because they're basically all US large cap except for just a couple of them. But you will notice if you compare it to, let's say, something like VOO or VTI, that the weightings in the highest market cap companies are significantly lower, sometimes by even about half. And that's just due to the fact that VT holds many, many, many more stocks. So the amount of money that it has to allocate to one of the top stocks is reduced by a significant percentage. So the top holdings at the moment are NVIDIA at 4.29%, Microsoft at 3.77%, Apple by 3.64%, Amazon by 2.07%, Meta by 1.57%, Broadcom by 1.5%, Google by 1.39%, Tesla by 1.23%, the other Google by 1.13%, and Taiwan Semiconductor by 1.03%. Performance of VT, so the 10-year CAGR is 11.21%. 10-year dividend growth rate is 4.57%. Current dividend yield is 1.7%. Assets under management are $70.91 billion. a 3% turnover rate, which is very small, and a year-to-date performance of 18.04%. And this data is based on Yahoo Finance. So here's kind of my theory behind VT and why it's such a good investment for a lot of people. So let's take 2024 as an example. The US market was up 23.7%, which is a fantastic performance for a yearly gain. The international market was up only 5.1%, which is generally below average. VT, however, was up 16.5%. So US market cap outperformed international by a lot, and VT was able to capture about 60% of that US outperformance because it's weighted 60% US, 40% international. So that's how you end up at 16.5%. So you always get second place. So let's take 2025 now as an example. In 2025, at the moment, the US market is up 16.8%, where the international market is up 28.6%, which is, once again, a fantastic year so far of international outperformance of US. So VT in this situation is up 21.1%. So you will never get the highest performance as far as international versus US. You will never get the lowest performance with international versus US. You will always get somewhere in between with VT. And that's what I like about it. So who is VT for? Let's talk about who it's not for first. So VT is not for people seeking the absolute highest level of return. So kind of like what I just discussed, you can always outperform VT if you're lucky in the sectors that you pick. Now, the keyword there is lucky. It is not perfect for factor tilt investors or income investors. It has a relatively low dividend yield of 1.7%. It's just a lower dividend, but if you understand kind of the, I guess, logic behind dividends, it's not a huge deal. But if you are going for current income, it is not going to be the one for you. It is not perfect for an investor that believes in US exceptionalism. US has been on a trend recently of outperforming international for a while now. If perhaps you expect that to continue, then maybe VT is not for you. Let's see. So VT is perfect for long-term investors who want simplicity and global exposure. It is also perfect for people who seek a set it and forget it investing approach, where it can be your core holding and all you have to do is invest in it periodically, be it monthly, bi-weekly, weekly, daily, whatever your preferred method is. It is also perfect for an investor that wants to avoid home country risk or bias. A lot of the times, especially in the US, this is pertinent, where an investor might only seek in US companies because it is familiar to them, but that carries a lot of risk. So in the case, let's say a large socio-political event happens, which leads to some sort of degradation of trust in the US economy, that could take a very big hit to the market. And if you're only invested in the US market, you'll see a lot of that home country risk applying to you, where not only your stocks might have an issue, but also you yourself might be a part of that issue. If there's a cost of living crisis, perhaps the stock market tanks, let's say 15%, but also maybe your rent goes up 15%, that's kind of that home country risk. And so that's my case for why I think investing in VT is a good idea. Thank you for watching. If you want to leave a comment, please feel free to do so. And if you would like to subscribe, that would really help my channel out. Thank you.